What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 56. It's August the 29th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about the important levels that we have on the chart today. So we have yesterday's closing price located down here at 34,591. So let's go ahead and get straight into it. So let's talk about trade number 0. So I took this trade right here in the pre-market, and I traded within this consolidation zone that got established. So as prices came back up to the top of the zone, I shorted right here, expecting for prices to continue down to the bottom of the zone. But if you read the notes, it says trade with the market direction, and that's very important because when it comes to zones, one of the main things I want to do is trade the zone in the direction that the market was moving in before the zone got established. So if we were in an uptrend before the zone was made, that means that I should only be looking to take entries from the zone on the long side as prices come back down to the bottom of the zone. So to go short right there is not the best decision. And I will also say that when I put this trade in, I put the order there, and then I went and ate breakfast, got ready for the market as the market was starting to open. But that's also one thing I try not to do as much as I can, because I like to see exactly what's going on as prices are coming up to the level that I'm looking to trade from. So that way, if I do want to decide to stay in the trade, I can. But if I want to get out of it and say, you know what, I don't want that order, I can always cancel it. So that's another thing too. Just a little slip up, but that was pretty much the only slip up I had today. And then I got straight back to my plan like I was supposed to. So let's talk about trade number 1, and let's talk about the market open. So when the market opened at 9:30, we saw prices break above the zone, come back, retest it, and pretty much just retest this higher low that got established right after trade number 0. So anytime you're in an uptrend and you see a scenario like that where that higher low gets retested, that's telling you that there is demand in the market. When you add that into the fact that we were right below yesterday's closing price, it made sense that the market pulled back to the zone one more time to retest the breakout. And then we saw yesterday's closing price actually get broken through. So once we broke through yesterday's closing price, we established a high for that swing at this green line that I drew. So once we had that swing established, I drew this line, and then I used that as a reference point to go long from on trade number 1. So on 1, I went long after prices broke above yesterday's closing price and then came back to retest the previous high. So anytime you're in a strong uptrend, that's one of the methods that you can use to actually enter the market. The two that I like to use this strategy where I use prices coming back to retest a previous high, or I like to see prices come back and retest a higher low support level, and we'll get into that on trade 2. So after trade 1, we see prices come up, they create a new high. From that point forward, they pushed up, had a little pullback right here, but we did have news come out at 10 o'clock. And as soon as the news came out, we saw this pullback pretty much come to a halt, and we saw the buyer step back in and push prices a little bit higher. So once we created this new high, we pulled back, created a higher low, and right here I used my higher low strategy. So I went long as prices came back to retest that higher low. Now I didn't hold this trade as I should have, because I just felt as though the setup just wasn't exactly what I wanted. Most of the time when you have this higher low setup, prices should not come back and break the lowest wick on that higher low support level. And if it does, that's telling you that the sellers are a little bit stronger than what you would like to see if you're trying to trade that higher low setup. So if you get a chance to get out at break even, you should be able to take advantage of that opportunity and go ahead and get out. Now in this scenario, this was one of those situations where it actually ended up being a successful trade if I would have held it, but I believe I made the right decision by getting out. I would say the only thing about this situation that I learned is that, yeah, even though the higher low was right here, the market came back to retest that previous high, which makes sense because a lot of the times if the market is a couple of points away from that previous high, even if it is some type of chart setup that says that prices shouldn't go past there, they still might just peek past it a little bit, retest that level really quick, and then get back to doing what they were supposed to. So that's pretty much what happened on trade 2. And I've actually, when it comes to higher low setups, I've never seen that happen before, where it shoots past the lower level of the wick and then bounces back and continues moving as the setup should be moving. So that's something new I learned today, and something I'm gonna go ahead and add to the playbook, because when I look back on it, it makes sense. Like, yeah, they were supposed to stop right here at the higher low, but because we had that previous high right here, it made sense that that level got tested. So I learned something new right there. So then we see prices push back up, and they tried to retest this high that they made from that swing, but they weren't able to do it. And that pretty much led to a strong sell-off all the way back down to retest the same point that prices broke out from when that news came out at 10 o'clock. So they came back to that level, retested it, created a tweezer bottom, and from that point forward, we continued to move higher. So once we push back up to this new high that we established up here at 740, we created another higher low right here at trade 3. So I used my same strategy, look to go long as prices came back to create a higher low and retest that support level. And on this occasion, that higher low also lined up with the previous high from the previous swing. So everything pretty much lined up and made sense. So I went long right there and took prices back up, not all the way to the top of structure. I expected them to continue moving higher to 750, but when they weren't able to do that, I went ahead and got out right there, because I'm like, you know what? If prices weren't able to break past this previous swing high that they established before, I don't want to be the one to hold the trade and say, maybe they will. And that's what I was thinking on trade 3, and that's why I got out right there. But I came back on trade 4, and I was like, look, if they haven't hit 750 quite yet, and I know that the trend is really strong, we should eventually be moving back up there to hit that price, which was true. But that happened a little bit later on after we came back to retest lower levels of support. So me going long right here at 4, even though I felt like that was the right decision to make, you still don't want to go long towards the highs of any swing, no matter how strong the trend might be, and no matter how strong you think the level above might be. Now, I like to trade based on quarter levels. So 750 is a major quarter level in between 34,000 and 35,000. So the other quarter levels are 34,000 even, 34,250, 34,500, 750, and then 35,000. So anytime you get close to that level and you're in a strong uptrend, you could pretty much just have a good idea that prices are coming to that level. But the only thing is, you also don't want to go blindly long at that level just expecting for it to be hit. You still want to make sure you have a good entry. So that's the lesson I learned right there on trade number 4. So we eventually came back, established a double bottom on the support level of that higher low that I took trade 3 from. And then that's when we eventually moved our way up. We hit 750, and as soon as we hit it, we pretty much reversed, sold off pretty hard, and came back to retest all of these levels of support that played a major role a little bit earlier in the session. So once we had the large sell-off, I was like, okay, now that the trend has the market characteristics, it kind of changed, the trend has changed a little bit. Now I started looking for my short trades. So whenever I'm in a downtrending market, I look for prices to come back and retest a previous level of resistance that used to be a previous swing low. And then when they get rejected from that level, that swing low and that resistance, that's where I like to go short. And that's pretty much the mindset that I had on trades 5 and 6. So on 5, I shorted here during the sell-off as prices came back to retest resistance, but my break even got hit. And sometimes when you're trading a really strong trend, it might come back. Like if you enter at the best possible prices, it might come back and retest that level one more time before the actual move happens. And that's actually what happened to me today on 5 and 6, where yeah, I shorted from the right level, but it came back to my break even right before the move happened. Now I could have chased the market down and tried to get those points that I missed out on, but I've been able to understand and learn over these past couple of weeks that sometimes your break even stop just has to get hit, and it is what it is. If you made the right entry from the right levels and you traded in line with the trend, you should still be happy about the results from that trade, because overall it's telling you that you're in line with the rhythm of the market. So even if this one closes at the break even, if you keep doing what you're doing, you'll eventually end up making profits later on, because you're making the right decisions in the market and doing the right things. And it's like when you do those things, the market will reward you. So took a break even on trade 5, came back on trade 6, used the same exact methodology, looked to go short as prices came back to retest a previous level of resistance, but my break even got hit again. So I think I did a really good job here of being able to be disciplined 2 times in a row, because I know sometimes in the past I would have got a little bit emotionally charged and tried to get profit back because I felt like, oh man, I had profit and then it came back to break even. But today I was like, nope, I'm going to wait for the next best opportunity. And when I see another one of my setups start to form, that's when I'll enter the market again. And that's pretty much what happened at trade 7. So after trade 6 got stopped out, that's why I realized that we came back to establish a double bottom right here. And if you follow this double bottom across, we actually lined up with the same level of the first higher low that got established after we came out of this first major pullback for an upswing. So whenever you're trading a very strong uptrend and you have a pullback that happens, anytime you have a higher low that comes out of that pullback and reverses the pullback, if the market ever sells back down to that level and finds supports right there again, and then you see some type of bullish formation start to form, that's the market telling you that there is a significant amount of demand at that level, and the buyers are still stepping in and supporting that level, which means that if you start to see your setup after you see these bullish signs start to form, that gives you more confirmation that the buyers are definitely in the market. So that gave me a lot of confidence when I came back on trade 7, because I saw the double bottom that got formed on the previous level from the higher low from before, and then we formed a new higher low on top of what used to be resistance, which has now become support now that we've broken through it. So I'm saying, okay, I saw my higher low coming out of a double bottom. Now when prices come back to retest the support level of that higher low, I will go long, and that's what I did on trade 7. I was able to take it from the bottom of resistance back up to the top of structure, and after that I decided to call it a day, because I wanted to come in here today and my main goal and my main focus was to just try and do everything the correct way. Now I feel like I did a pretty decent job on that. I took 8 trades today, and out of those 8 trades I did the right thing on 6 of them. So very proud of that. Still trying to get it to a point where I make the right decisions on 8 out of 8 trades. So that's the goal going into tomorrow, just cleaning up these little mistakes, because the little mistakes, they add up over time. So I want to make sure I keep those at bay and make sure I capitalize on all of my best setups and let those profits ride, and try not to eat into my profits by taking unnecessary subpar trades that don't really line up with my trading plan. So today my main focus when I get on the back tester is going to be trading the zone from the right direction. Don't get too excited. Don't leave your orders there if you're not at the screen. And then number 4, I need to improve on just making sure you don't go long at the highs. The only reason I felt like it was valid to go long right here was because I had a long trade from trade 3 that was successful, and I was like, you know what, if trade 3 was successful, if I would have just held trade 3, I felt like maybe it could have went higher. So I'm like, if that was successful, I can just bet the profits that I had from trade 3, and if it comes back to my entry from trade 3, then I'll just get out. But I don't think that's really the right way to think about it, because that's more so like double dipping on the trade that was already profitable, and that's one of the things I definitely strive to not do. Just the same way when you have a losing trade, you wouldn't want to get right back into that losing trade again, would you? So the same way you have a winning trade, once it's over, you don't want to get back in and try and look for continuation. Instead, you want to see if the market is going to continue to move in that direction, and if it does, you look for your potential setups that you like to use, and if they come around, you take those, and that's when you enter the market. So that's the biggest lesson from 4. I need to work on that. And then trade 0, and other than that, I would say everything else I just need to continue doing. If I'm gonna go short, I need to do what I did on trade 5 and trade 6. I need to short from resistance as prices come back to retest it and then get rejected. And then when it comes to my long trades, I need to continue to do what I did on trade 1, which is if prices are not giving you a higher low, instead you should look for prices to come back and retest a previous high. And if prices do give you a higher low, like they did on trade number 7, you look for them to come back, retest that level of support, and then you go long. So pretty much I feel like I had a decent day overall. Still got some things to work on, but I'm gonna get to it. It's nothing I feel like I can't accomplish. So let me go ahead, put this work in. I appreciate you guys for tuning in with me. It's been a good day so far. I hope you learned a lot, because I definitely did. I'll be back tomorrow on August 30th, somewhere between 9:30 and 9:40 in the morning. And if you missed today's live session, make sure you go check that out. It's up on my live section video right now, and it's in my Trading My Scalping Strategy playlist. So make sure you check that out. I'll see you guys tomorrow, but until then, take it easy.